Hey guys, just want to go over a few basics tonight, just because I've had a few questions in the group. So I'll just go over stuff a little bit in depth on some basics. I'll start off with trend lines. I'm very particular about my trend lines. Genuinely believe that price is all done on purpose. I don't really think there's much room for error. As you can see here, obviously it's 1 touch, 2 touch, 3 touch. This is about as much as I would accept as a break. But I mean, I could probably move that slightly. Anyway, to be better, I might be better at that. Yeah, so that's the actual trend line there. All the way down to here. Just extended it. So it will, price probably will come down here at some point. Sweep it maybe into some way down here. Another sweep 1, 2, 3, 4 touches. But it's all very precise, nearly hit perfect. What I do really like to see, what I sort of feel confirms the trend line is this here. So you've got price comes down on it, it literally touches the line, little retracement. This is to induce trend line and spot resistance traders. Yeah, so what this will be here on after you've had 1, 2, 3 touches, this sort of confirms a trend line for me. So on this one, you'd likely get buyers, which is probably this push away. On the 4th touch here, obviously you've got a touch. As soon as it starts to react, what you'll get is you'll get like spot resistance, trendline traders buying from here. So the bank will give them that little bit, and then obviously the manipulation comes in, sweeps, takes all the stop losses. Because what will probably be is in here from this low here. I'm sure what the stop loss will be, but let's say it's 20 pips or whatever. Yeah, you want to ride up to here or something. Obviously, give them a little bit, take out the stop losses, and then go and then break away. I really like to see this little push away on the end of a trend line. I'll get a couple more examples so you can sort of see. Maybe that's kind of good that one. The average all over the place. This is just one chart, so I don't know if there's too many on it. Here, yeah, touch, little retracement, gives them a little bit from here, sweeps up, yeah, and obviously back break structure, further down the line. I'll go over this trade shortly as well. This is one that I missed the entry. Well, I bottled the entry really, but I missed it as well anyway. But yeah, and again, obviously you've got a couple of touches, so again you'll get buyers after 1, 2, 3 touch. You get buyers out of here. This has not been taken out yet, so but on the next touch, I would really expect the price to be something like this. Yeah, sort of expect that you've had 3 or 4 touches, but you'll get as soon as it touches this line and it pulls back slightly. Give them stop losses, give people buy orders, stop losses, however, to wherever. Bearing in mind, forward with stop losses, like really have that. So give them a little bit, take them out, take their buy orders, to move the market down. yeah, so that's trend lines to me. I don't really accept sloppiness is probably the best way I can put it. Which is like I say, you see it, it's everywhere. That kind of what time frame this would be. Touch. Little retracement, bang, take out liquidity, goes the right way. Same as this one here, touch. So it pulls back in here slightly, more like on a lower time frame, sweep. So yeah, I really like precision. Touch, retracement, sweep. Yeah. So yeah, that's it. Trend lines. One of the other things sort of wanting to go over is imbalance. I think the majority of us know what imbalance is. Show you one here. Good example of imbalance. It's not been covered yet, so it's not. Find something better. This might not be imbalance in here, but I'm definitely on a higher time frame, like the 4 hour, still sort of class that as a balance. It goes from the bottom of this candle here when you've got whole body, so there's a lot of imbalance in there. Below. Yeah, as I zoom in, bottom of this wick here, the last candle, big push down, and then obviously prices come back up, and so it would have been originally to here because prices come back to here. It raises up to the last amount of price. The price comes back up and fills it. Price can come down here. Let's say it comes there, goes that, and then imbalance would then come to that, or there's a width as well. But yeah, see, so we all roughly know what imbalance is. I'll just explain what my understanding of the deeper stuff behind what imbalance is and why I consider it very important. Try and find a good example of build. So to go against. So as you can see, there's big push down here. Also, there's been a trend line, a sweep, so that this becomes a point of interest. As you can see, there was before it reaches price reaches back up, these imbalances there to there. There's a bit here as well. There's there. You go with this top on each. My points of interest generally start from the open of the imbalance. But sometimes you get this sort of candle that's tracking as well, sometimes at the bottom of it, so it's a bit of a supply there. What I believe happens, so after you've had this liquidity sweep here, and then you get a big sort of pushes down. In this here and this here it's all down movement, and it's quick down movement. So if you had if you need to balance the books for every every sell, you need someone that's got a buy sort of thing. So you need to have a balance book. This all here is all because it's all down movement. There's not enough time for brokers, banks, or whatever it is to take in the correct orders for the amount of movement, because this is a lot of movement. Just there alone, 46 pips. Just in that one candle. 15, 16, 17 there. So what tends to happen is after these big movements, they come back to collect orders between these places. So yeah, so what you see is tend to get filled, and price usually sort of like slows down around them as well, because they want to take price like orders in for down here. But yeah, for me, it's just a balancing the books sort of price action after they've done the manipulation and the aggressive pushes away. The price has got to come back, so if we fill in the orders that we didn't have, rather made the violent push ups or push downs. So yeah, it's just a filling exercise really to get paperwork in order. Whether there's a reason they've got to do that or not, I don't actually know, but I imagine that they've got to show orders for movement in price. So that's basically imbalance. It's just a book filling exercise, I think. I do believe that the market's always doing one of three things, and this is probably a good example, really. So you've got a trend line here. This, one of the things I believe is building liquidity. So you're going to have a lot of stop losses above this line here. Yeah, building liquidity, that's one of them. Equal highs, trend lines up and down, support and resistance areas, things like that. Yeah, so building liquidity is one of them. The next one on the list for me is taking liquidity, so liquidity sweeps. It's the same trend line sweep, that is taking people stop losses, so that's taking liquidity. The next thing I believe they're trying to do is balance market, so fill in imbalances, correct the bookwork, and I'll play this again so you've got a breakdown. Yeah, so price comes up, fills a bit of imbalance in here, creates liquidity through here, sweep goes again. Yeah, and it just, I believe it's just so we go through the time frames on here. So I think we all know roughly our trade now. So we drop down on the time frames, roll up the imbalance, imbalance. Imbalance, yeah, imbalance just to the bottom of that line, just here, little imbalance, fills it, probably creates liquidity, goes again. Probably does the same on this, what would have been a previous entry, drops, creates imbalance. I know what the entry is normally like, so there's probably a tiny bit of imbalance just below this green zone I have marked on the one. And because I believe imbalance is so important, yeah, see that perfect example. That's imbalance there. Imbalance. So because I wait for the time frame, look, I start on the 4 hour, 2 hour, 1 hour, then I go for 15, then to 1. Because like I say, because I think imbalance is so important. Obviously, this would have been my entry once it breaks 1 minute down again, but somehow the entry would have been. Blue box is imbalanced. And set. See how close it comes to filling that imbalance. I think because we're working through the time frames from the 4 to the 1, the market basically filling the last bit of imbalance before it's going, hopefully, to a new destination for a new trade. So as long as we get it right, we sort of should be we're hopefully catching the bigger moves to another point of interest somewhere else. It's quite common. It is quite common on the entries that it does leave a tiny bit of imbalance. We're on the 1 minute, so we're pretty much half fills the imbalance. The blue line's what it's filled. Actually taps into this candle here by looks of it. Yeah, like I say, pretty much half fills the imbalance. What that looks like slightly different. Yeah, see on the 3 minute, it perfectly fills the imbalance because that would start here. Yeah, so 3 minute, you'd have had imbalance from there. So pretty much fairly over. I bet on the 2 minute it looks like perfect. To be honest, I bet it fills it on the 2 minutes. So yeah, that's imbalance, guys. It's because I believe it's one of the 3 main things the markets are trying to do. Chances are, if you're not becoming liquidity, chances are, and you're going off imbalance fills as well, you're going to be on the right side of the market quite regularly. Yeah, you can see this trade just really filled the last little bit of imbalance, I believe. And then it just goes. But we won't hold that because it'd be a long time and we would shit our pants. Would maybe follow the market structure, wait for a break or something, maybe got out here at best. Yeah, so that's imbalance, guys. It's super important. So are trend lines and the accuracy. Yeah, looks like it's a trade that's married up. It's an area to me. Trend line touch. We're on a lower time frame of the 1 hour. There's probably a little candle rejection. I know it's basic, guys, and probably a bit boring for most, but it's probably the start. We check slightly. Yeah, very basic, but it's important stuff. And I think if we have a real good understanding of what stuff is and why it's doing it, we can spot it to not become the wrong side of the market. I will just have a quick gander over Euro AUD. Now I've posted it in the group Friday, I think it was. Right through it. Um, yeah. So got a trend line, touch, two touch, dead touch in here, little retracement sweep. We've had a couple of areas. I can't remember what time frame this was on. I don't think originally I had this yeah, max couple was at 15 or something. So from this body here to this height, you could, in reality, you might have matched up there down to somewhere in here to be honest. But as soon as I see as soon as I see this created, I knew this was inducement. And so yeah, I'd set it as I made sure my zone was just above these because I knew the liquid created should be taken, sweep, placed in out, then balance the books, which is filling in the lacking balance on the 1 minute after it's done its thing. What I'll do is I'll try playing this trade out so we can so we've got a higher time frame. Just set an alert at the bottom of the box. Yeah. Obviously I've posted the same for the week out. Someone will listen. So the alert will go on there. 15. The most recent break structure, so quite a tricky one to be honest. I'll set alert somewhere under the bottom of these here. Look at this. Possibly maybe set it here as well, set alert in the hope that it clears both. To be really sure if it's broken through here. Super happy. Won't go on our inbox until this is played out. Obviously, if price comes and takes this high out, then I'll play low, whatever created, but there's the new low. with that. Assuming I fold this up. Looking here. 15 minutes to get imbalance. Pretty good. We've got a trend line. Still the chance of this was structure. You see this sort of wicks that touch it but don't break it, but then it eventually goes. Then it breaks through the lower zone. Lower zone. Break. Breaks this one as well. Definite break of structure anyway. There's no question. This was messy, but like I said, I'd have accepted it. Now that I've got my 15-minute box, and I'll set, obviously I'll draw each one, set a layer at the bottom as well. Waiting for it to switch. So now we zone for 1 minute, late mark, with no zone. Obviously, at that point, you can forget from all that, all the price action until that, set a late, wait for it to actually do its thing. So, come into the zone, right? As soon as you come into the zone, I'm setting late here, to be honest, a lot below here. Create a new high, so there, and then I'm considering moving on to here now that it's created a new high. As long as it's convincing. Before it creates a new high as well, there's one of the traces like that. I'm setting late down here. I also set one just above this, so if it breaks it, I know that I need to be looking at it and waiting for a new high to be created. It's broken. Just rewind that, just so we can. It's broken down here, so I'm just going to put it back so I can look it for a nice tight entry. From there, we've created liquidity under where my entry would look to be. It look touch, sweep. The liquidity under here, you might be able to. Yes, you got liquidity under here, so definitely look for an entry somewhere in here. Literally top of that. Over the high if you want. Yeah. Maybe touch it just above this. Right in there. I would often drop down, check on the lower time frames as well. So if you want to get it tighter, again, you can put it into a little bit. You can maybe even be able to pinch it there if it was brave enough. What I'll do is I'll put this on there for now. draw a blue line. That would have been my entry. So obviously again, filling in balance. Yeah, it looks good with that blue line, to be honest. I know there's a tiny bit of imbalance here, but you'd want it to trigger at least. And we're up with on the 15-second. I don't even know if you really class that as imbalance, to be honest. But base, I think it's the same point. So yeah, go back to the one, straight out. See if I got it right. See if I got it. Points of interest where we would take a trade out. So I think we get us right. We'd maybe set a TP here. One. Looking up for liquidity to be taken, or areas where price might turn around. Two. Three on there. Maybe we could take some, take over here. Here. Trend line here. Surprised very much because price will come down the street, this trend line. We do that. This whole video. 5 minutes. See what goes up for it. Build perfectly. Also, it's super tight entry, so we're allowed to spread anyway. Put it down. Either been in. So I think I actually have my for there's one about. And when you'd still been in it here, but right now, yeah, I think, remember right now, I didn't actually have this one here, and I got one here, because that break was below the original 1 minute structure here. We've not got time. Yeah, I think Stuart Hooton having this actually. He was right in the trade, but we just had a deeper 1 minute break structure. It's the same thing again. Obviously, we know break structure from below here, but we've got liquidity up here. That point in time. So you can see a bit of the imbalance again. So let's see. Okay, guys. See you later.
Wow.